Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 848, and today's date is December 11th, 2015, and the title of the episode is The State of the Economy is One Big Illusion, and the Collapse Will Shock the Masses. Let's get right into the economic collapse financial news. Now, as we look at the economy, we see that this entire narrative coming from the U.S. government, the central bankers, is a complete illusion. And they're spewing out different retail numbers today, trying to convince us that this holiday season is a lot better than it really is. And the American people, their faith in the economy right now, it has plunged to 15-month lows. And they are not believing the propaganda that the economy is doing well. And they are saying at this point that we don't believe there's good times ahead. And basically what's happening right now is that their faith in this system is declining. Now, today, the U.S. government, the central bankers, came out with retail numbers. And of course, the corporate media is out there saying, oh my God, retail's the best ever. It's up 0.2%. This is incredible. The holiday season is picking up. Everything looks great. And when you look at these numbers, we see that vehicle sales have dropped by 0.4% in October. In other words, basically what's happening right now is automakers are channel stuffing. And what we're seeing is that the 0.2% increase in sales is one of the lowest points since the Great Recession and before. And this is actually the fourth miss in a row, month on month, and the weakest year-on-year growth since 2009. Now, they're out there saying 0.2% is really great. It's fantastic. But when we look at this and we go back just a little bit to November of 2014, we see that, the retail sales we're at 0.4%. If we go back to 2013, we see that retail sales were at 0.5%. And if we go back further and further, it's at 0.9, 1.1, and so on. And what we're seeing right now is that retail is not doing well. Because if you really think about this, they're trying to convince us that 0.2 is good. Now, of course, they exclude auto sales now because auto sales have dropped. So they say, okay, now instead of 0.2, we reach 0.5%. If we exclude gasoline, that brings the number up even more. And of course, those years where they're telling us that retail sales were much higher, they included vehicle sales because vehicle sales were much, much higher. And if you remove them, actually retail sales come down. But what's very interesting is that we're seeing a downward trend. And this downward trend, again, doesn't fit their model of unemployment. Because they're trying to tell us that unemployment has dropped to 5% and retail sales are getting better. But in reality, retail sales are declining. We discussed this in previous reports. And it's fitting the same model right now. Because if we go back to 2014 to 2013, unemployment was higher. And we had higher retail sales. Unemployment is lower. And we have lower retail sales. It makes no sense. So again, someone is lying. And some of the different industries that have not done well are motor vehicle parts, which is negative 4%. Furniture, home furniture stores, negative 0.3%. We see building materials, garden supply dealers, negative 0.3%. Gasoline stations, negative 0.8%. And as we go throughout this holiday season, it's not going to get any better. And let me just say, last holiday season, they revised the retail numbers many times. And this is what they're going to do this retail season, is they're going to take the numbers, revise them, and try to push them up as high as they possibly can. because we know at this point retail is not doing well whatsoever. Business inventory sales have surged to cycle highs. This is deep in recessionary territory. And this fits to wholesale inventories to sales, which is also deep in recessionary territory. And when we look at this, we can see that we are headed into a complete disaster. Now, global commodities have been crashing. The last time raw materials like copper, oil were this cheap, an economic depression loomed just around the corner. Prices from everything like crude to industrial metals like aluminum, steel, copper, platinum, palladium have collapsed even further in the last couple of days. The crash in prices is hitting mining companies really hard. As we reported before, Anglo American is going to get rid of 85,000 employees. And this is the 5th largest mining company in the entire world. Overall, the U.S. has lost approximately 123,000 good-paying jobs from the mining sector. And this is since the end of 2014. And if the commodity prices stay this low, it's going to be a complete disaster. In the housing market, mortgage applications for new homes decreased by 6% in November. Again, in a downward trend. Now, if interest rates increase and the Fed decides to go ahead and do this, it's going to destroy the real estate market, because you have to remember the interest rates right now are very, very low, which allows everyday Americans to afford a nicer home. Once interest rates move up, they cannot afford that same home. And most of them say, okay, you know what, at this point, maybe I should be out of the market. And this is what happened back in 2007 going into 2008. Now, back in 2012, President Obama promised that he was going to create 1 million new manufacturing jobs by 2016. Here we are at the end of 2015. Has he created 1 million manufacturing jobs? Actually, no. Actually, we've been losing manufacturing jobs. I think the last count was 1.4 million manufacturing jobs lost. Now, if he said he was going to create 1.5 million waiters, bartenders, that would be true. But the BLS has come out with a calculation, and they are projecting, and we know this number is always low because they never really project anything correct. And when they're projecting that things are going to be really, really good, they project that number really high, and then it's always much lower. And when we look at this, they're saying in the next 10 years, manufacturing is going to lose another 814,000 jobs. I'm going to say this number is going to be doubled or even more. And basically, this economy right now with manufacturing is going nowhere. The United States has lost manufacturing completely. A country cannot push forward without manufacturing. A country that is just consumer-based will not make it. It will collapse. Now, Bill Holter is saying that this recent market crash, it's only a test. Now, I'm going to have Bill Holter back on the X22. We have him scheduled, and I'm going to be interviewing, and I'm going to ask him questions about what we can expect and what's coming up. So I'll let you know when that is going to occur. But what he has said is the Fed really wants to raise interest rates. Well, they don't want to, they have to. Because what's happening now is they kept interest rates at 0%, and they're going to have a credibility problem. And we know this. Remember, the central banking system does not want the blame for this. They don't want to be looked at as saying, okay, you caused this collapse. So at this point of 7 years of having 0% interest rates, they need to do something, because they're telling us unemployment is at full recovery. The economy is doing really, really well. Housing's good. Retail's good. So he is saying that this last market crash is a test. And basically, he said if they raise the interest rates by 0.25%, it will require the equivalent of up to 800 billion of collateral to be pulled from the economy. That's 800 billion. A huge number, and enough to tank the whole system unless someone is willing to replace it. So they wanted the EU to replace it. It was supposed to be Europe. Mario Draghi tried to push the EU Governing Council into further QE. In essence, the German hawks refused and instead want to let some air out of the current bubbles. Europe was supposed to carry the baton of QE. They dropped it. So where does this leave the Fed and their quarter-point raise increase? Well, we've already seen the future. If they decide to hike rates, and the EU does not pick up the collateral slack, we will not see the market stay open for more than a week or so. Because, in essence, the Fed will be issuing a margin call into a system already lacking for liquidity. On the one hand, if they do not hike rates, their credibility is toast. If they do raise rates, they're going to smoke the entire financial markets faster than you can call your broker with the sell order. So we're heading down this path where this entire system is coming down no matter which way you look at it. And we talked about junk bonds, and right now the junk bond market is looking more and more like the boogeyman for the stock market investors. They're selling off the junk bonds right now. Corporate insiders are selling off and getting rid of their stocks. We're heading into a major, major problem, which is called the collapse. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.